Okay, good morning, ladies and gentlemen, and welcome to the Financial Juice morning briefing with your host, Tony. So what I want to do is just go through a couple of headlines with you as I normally do. First article from the Business Insider. It says, or from the Market Insider, what it says is oil plunges 321% into negative territory for the first time ever. And from this, what they said is that that is due to demand evaporating. WTI for May delivery has traded at large discounts to long-dated contracts. That dynamic is playing out amid worry that a key storage hub in Cushing, Oklahoma, is nearing capacity. So from this article here, if we just read further into this now, yesterday we saw some huge reactions from May's contract of WTI crude oil, where we saw it go into negative territory and finish at minus $37 a barrel. Now, one of the reasons why you saw so much of a sell-off in crude oil or WTI crude oil futures or WTI crude oil, the main reason being is because the contract is ending and people don't want to hold on to a position where they can see prices falling. One, because of the potential of storage being filled, and two, because oil prices on the futures contract for May was already quite low. So if I just bring up US crude oil futures for May, okay, I'll just show that for you guys here. So this is what we can see. This is what we saw yesterday. Reaction wise, we got to our lows of minus $40 a barrel as people were selling off, ending their contracts to get out of the futures contract, which ended yesterday. And you just saw this huge sell-off in the markets. Now, one of the other key reasons as to why we saw this sell-off in the markets is because of a phrase called contango. Now, the actual spot price for oil, what it means is the spot price for oil is lower than the futures contract price. Okay, so what usually happens is in futures is the price of futures tries to converge with the spot price of oil, and one of the other reasons is people don't want to hold on to a contract in fear of the carry cost for keeping an oil contract. What would happen is at the end of a contract, either you get paid a settlement or you'd be given the physical asset of oil. Now, that's what people were fearing, that they didn't want to hold on to the carry cost of holding on to an oil asset. And that's why we saw this huge negative reaction in crude oil futures yesterday. Also, if we just go back to the article, just get another better idea of what's going on. So again, May plunged to minus $40 a barrel, which is the lowest level ever recorded. Again, this is speculation from the markets. The spot price of oil doesn't change based off the market reaction. So if people are saying that they're going to get cheap crude oil prices or petrol prices, that's not the case. The only reason you would see cheap oil prices is if the actual spot price of oil had drastically changed. But again, markets are trading off of speculation here. So this is one of the other reasons that we can also see a reason in a continuation in depreciation of oil from this article here is that investors remain unconvinced that the cuts can offset cratering demand for the commodity as the coronavirus pandemic keeps society from operating normally. As these companies and countries go into lockdown and it goes on for longer, you see the demand for oil naturally deplete. And again, this is what you saw in the contract yesterday. but you saw more momentum kicking in and a lot of money being taken out from May contracts, so it became illiquid. That's why you saw a sharper movement towards the downside. And then you saw over, when I was looking at it last night at the end of the session, there were over 1 million contracts for June crude oil futures. So it just showed a huge switch and a move towards the next contract. People who held on were very unlucky, and it didn't make sense for them to carry on. And that, again, that's why you saw a switch from May crude oil futures to June crude oil futures. So if I just bring up the June crude oil futures just to see where we sit at the moment. Okay, and I just bring it up on the chart here for you guys. So this is where we currently sit at the moment. So if you're saying that, okay, what we're gonna see. So yesterday, from the CME, they said that futures can trade into the negative territory, and that's what we saw last night. But what we can also see here from June crude oil futures is that they had a starting price of where you would buy crude oil futures at the futures price at $22 a barrel. Now that at the moment we're in a backwardation where prices for futures are below the current spot price for oil. Spot prices, this is why we're seeing significant movement towards the downside as it continues, and we're likely to see the same sort of scenario for June contracts, as where we see June contracts moving towards the downside. Now, if I was to put it on an intraday, on a minute chart, just to see what happened and where we are. So as June contracts switched, came on live, or as the May contract ended, this is the reaction that we saw. So on the 21st of April, once we ended that contract yesterday, crude oil futures continued to move towards the downside, and then as we saw from around $22, that's what we saw, down to our lows of $11.77 on crude oil futures, and then we're seeing this rebound here. So if people were presuming that oil prices would stay at negative into the next crude oil futures, that's not the correct assumption to make. It starts at a whole new price altogether, okay? And its futures are buying a certain asset at a future price. And this is what they set it at $22. But speculation is going to continue to have a strong gameplay here within the markets, where you're going to see some more selling going on. So again, as I said, don't be surprised if we see the same scenario that we saw yesterday at the end of the May contract happen to the June contract, where people start to pull their positions out of the June contract towards the end of the month and chuck their positions into the next contract for July instead. And then you could see, because the market would be illiquid, you would see a huge sell-off again in the markets, and then you would see more liquidity in the next contract, which will mean that prices won't move so much in the next contract compared to the contract that's just closed. Okay, just wanted to have a look at another article as well, bring that up for you guys. So if we're talking about the current capacity that we have within the US and in Cushing, Oklahoma, so we've got to remember this, put this in the back of our minds. From a Reuters article, a hunt for any storage space turns urgent as oil glut grows. Now, in Cushing, Oklahoma, which is home to dozens of large tank farms with combined space of 76 million barrels, operators are fully booked, according to traders, and storage there jumped by 5.7 million barrels the week before last, according to the EIA. So this is another thing that is going to be have a negative impact on US oil, not just in futures, but also for their price of oil. Now, logically, as oil demand falls off and storage capacity reaches its near or is completely filled, the price of US oil or any other country's oil would become worthless. You'd get to really, really low prices, and this is a negative thing for US oil companies. So you've got to think about US shale companies, right? They're going to go out of business quite quickly if the government doesn't do anything, but it's still quite a lot of demand that has fallen off. And that's why you saw the strong movement in speculative trading yesterday in May futures contracts. And you see that moving into June contracts as well. You've got to remember that one of the other things that Trump has also said yesterday is that the US would look to buy a lot of oil, of around 70 to 76 million barrels of oil, to keep those shale companies, one, in business, and two, to control the price of oil within the US. So if we're looking at other prices, so non-US prices, and we'll just bring up Brent crude futures. Okay, so Brent crude futures, if we just have a look at that, that did see a depreciation in the markets but not as much as the US oil. Now, the reason why we saw a much more stronger reaction from US crude oil futures is because one of the other headlines and news bits coming out of the US coming to near capacity. Now, that's not happening in Brent or UK oil, as we've seen, compared to the US. So that's why people thinking, well, why is Brent crude oil futures trading higher than US crude oil futures? As I said, it's speculation that the US will come to near capacity or will be completely filled in capacity, and oil will become worthless, and people don't want to hold on to oil that won't give them any sort of cash flow or any money or profit. So that's why, but for Brent crude oil futures, that's a completely different scenario, as to where in the UK, you don't see that capacity being filled. And that's one of the reasons why you see this huge variation between Brent and WTI crude oil prices. So again, that's another thing to keep in mind. So you have fundamental news of the US coming to near capacity or reaching capacity, compared to the UK not coming to capacity for Brent crude oil futures. And that's why you've seen that huge movement in crude oil futures yesterday. Now, if we go to, so going away from oil and expecting more downside movement for the future, if we bring up another article here for you guys to have a look at. So, from the Guardian article, what it says here: South Korea and China play down Kim Jong-un ill health claims. So from here, what they say is, according to the Daily North Korea or Daily NK, they claim that Kim, who has not been seen in public for 10 days, was being treated at a private villa following the procedure this month. According to CNN, meanwhile, cited an anonymous US official as saying that Washington was monitoring intelligence, suggesting that Kim was in grave danger. So again, this is just some news speculation going around, rumors of Kim Jong-un's health. Will he be able to overcome this health crisis that he's facing himself physically? And what does it do for the rest of the globe? Now, you have news coming out from China and South Korea downplaying this news of Kim Jong-un being ill as well, and saying that it's not as bad as it really is. It's not really going to have a market moving impact news wise if we're thinking about that, but this is just one of the key headlines to kind of keep in the back of your mind of that. Of course, in North Korea, you have one leader, which is run in a communist state, and he's a very key figure. He is the key figure to the nation. And all this talk about nuclear proliferation, which hasn't happened yet, which the Trump administration was looking for North Korea to disarm or stop trying to make nuclear weapons. That hasn't happened yet. So if we do get some really horrible, if we do get some news coming out from North Korea saying that Kim Jong-un has passed away, if that comes out, then it's just it's going to be a bit of a battle within the North Korean government state as to who would take over. So again, as I said, that's not going to be market moving. It's just a bit of news just to keep in the back of your head as to what's going on within the world. Now, if we take a look at another article. So, from the New York Times, Trump says he will suspend immigration as some governors take first steps to reopen states. Now, Trump made a tweet last night saying, in the light of the attack from the invisible enemy or coronavirus, as well as the need to protect jobs of our great American citizens, Trump wrote on Twitter that I will be signing an executive order to temporarily suspend immigration to the United States. And this is something that it's more political here. Again, as countries have already gone into lockdown, this isn't really market moving news. The only market moving news is how well the US deals with reopening its own states. So the states that are reopening their areas are mainly Republican. So we'll see how that plays out. You don't have anything from New York or New Jersey or anyone looking to reopen their states. So again, it's important to know what's going on within the US. But as it says here from the article, Trump administration has said that health concerns justified moving swiftly to bar asylum seekers and undocumented immigrants. I mean, it's already quite late to stop people from coming in, although that was already done internationally when during the outbreak of the virus in China, where they stopped Chinese officials or Chinese nationals from coming into the nation. But again, it's too late. There isn't any point to having a complete lockdown from any foreign citizens. It's already spread. The only thing it can do is just stop the flow of the spread just a little bit, but not that significantly. So the number of visas issued to foreigners abroad looking to immigrate to the United States declined by about 25% in the past 3 years anyway. That's even before the pandemic had come out. And again, this is more political stuff here that has come out from the US side. Now, just look at a final article as well. Now, this is one of the interesting stuff that we're seeing from from Bloomberg. Bad news just won't stop coming for the pound. Now, one of the other things that is happening, and to keep in the back of your mind, is that we do have Brexit stuff that is still going on. Now, the pound or the cable, if we just take a look at that, if I bring that up for you guys to have a look at, pound is showing a depreciation in value compared to the dollar. One of the reasons being is that you have comments such as from one of these guys here from Bloomberg, also just saying that whilst some foreign exchange strategists are betting the pandemic will support the currency by underlying the benefits of a split from the EU, pound pessimism is increasing on fears the final divorce terms will be messy. That's according to analysts at Rabobank and Miso Bank Limited, and also the Royal Bank of Canada, saying that the UK currency extending losses in coming months amid heightened Brexit uncertainty. Now, the UK and EU are holding virtual meetings with each other, but as I mentioned yesterday, the UK has not made the decision, or has made the decision not to, or is looking to make the decision not to extend the transition period beyond December 31st. So June is the deadline for the UK to say whether or not they would like to extend the transition, but that's not going to happen so soon. So again, it is going to be quite messy. So the UK currency has already dropped 6.7% against the dollar 2020 to 1.23. That's its biggest year-to-date retreat since 1991. And sterling reached a 2-week low on Tuesday, weighed down by wider unseen global markets after a rout in the US oil market. Prices fell below zero Monday, thrusting markets into a parallel universe where traders were willing to pay $40 a barrel just to get someone to take crude off their hands. So we're just seeing some continuing pessimism here that's being priced in by the markets, and we're likely to see this roller coaster as we can currently see again. So we're currently trading, well, we are below that level of support at 1.23, and we're not really trading in a range as of yet. We are seeing, as we have seen here, we are seeing a bit more selling going on, but not as strong as this buying that we have seen in previous weeks, and also in the past month or so on the pound. So if we took a look at the daily chart as well, let's have a look to see where we are. Again, we do have potentially what could happen is we could move towards the downside here on the cable to this level of support to 119, and depending on how aggressive, how these Brexit negotiations turn out. And that's one of the things that we've got to keep in mind. That's what we're currently seeing. That's the current situations where we sit at the moment. So we still have this strong selling momentum and this buying coming back in, but it did hit this level of resistance here at 1.26, and now we are moving back towards the downside. So again, it's a negative trend that's being created here on the cable. So this is what we're currently seeing. Okay, news-wise for the day, other than retail sales from Canada, not really seeing anything, not really anything too significant for the day. It's going to be quite quiet. And so other than that, you have US existing home sales. And also, if you've checked out our calendar on the Financial News page, you can also see we also have the Westpac, or the Australian Composite Leading Index, in the evening as well. But other than that, there isn't any market. These economic releases are not going to be so market moving compared to the strong market moving news of coronavirus. Keep an eye out for oil futures. As I said, we probably will see a similar scenario as to what we saw in May contracts as well. And that's a given, as people don't want to buy oil. Hence the headline or the title for this live stream video: want to buy my barrel of oil, because there isn't a demand for it. Okay, that's your market morning briefing. Thank you for listening. Don't forget to like, share, and subscribe to the channel. Thank you very much for listening, and we will catch you soon. Thanks. Bye.